Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Thursday, October 12th, 2023. Before I click on the charts, as usual, just want to encourage you to please click like if you haven't already. Become a Wicked Stocks YouTube channel subscriber. Also, share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, as well as weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for at least 20% moves on those stock picks. Just on Wednesday, we put out a stock pick on CrowdStrike. Monday, Elevance Healthcare. Last week was UPS and McDonald's. The prior week, AMD, NVIDIA, all of which are still relevant. You can check it all out for free. We offer a 5-day free trial up front. So if you sign up for wickedstocks.com, you can check out everything for 5 days. And if you don't like what you see, you can bow out at no cost to you whatsoever. Let's jump into the charts, start with the big picture, work our way into the day itself. We did test several weeks ago what had been a targeted long-term support region, 166.07 to 167.49. Able to contain selling well into next year, and still above which the 228.66 formation anticipated by this point next year, I think, is realistic. On the way up, our next meaningful test and present 2 to 3 week objective is 189.55, where we could top out possibly through November and fall off again from there back into the upper 160s. We could fill this wedge out for the next month or two. If we were to close above 189.55 at the end of any week, then I see 228.66 a realistic, possibly 3 to 5 month target. I may have to stretch that out as 189.55 drops and 228.66 continues to rise away from present price levels. That is the big picture of the upside. I will say that if over the next few weeks we close below 167.49, no longer anticipating longer term bullish continuation, but more like a 3 to 5 month sell-off into the lower 130s. But we're a long way from that right now. And in fact, after having tested that 167.49 long-term support level, the market did, about 4 trading days ago, elicit a meaningful 2 to 3 week buy signal that is still in play above the 173.38 to 173.73 region, anticipating 188.93 as a realistic 2 to 3 month upside objective. Just yesterday, Wednesday, we did close just above the 179.32 formation. And you can see it here as a session containment level. You can also see a new 2-week rising channel bottom at 176.67. I cannot say that the settlement that occurred on Wednesday above the 179.32 formation was by a wide enough margin to consider it a convincing secondary sign of strength as we move into next week. But we could certainly open higher on the day. We could gap higher above what was Wednesday's 179.85 high. And if so, I see this market likely to continue higher, possibly to 182.91 on an intraday basis. That is about here. It is a Fibonacci level, but just know that if we were to close more comfortably above 179.32, and that, by the way, would be just merely a higher settlement on the day, it doesn't really matter where, then I'm going with 188.93 then as a 1 to 2 week target. Remember, it's a 2 to 3 week objective anyway, above 173.73. So that is the upside. Now, once again, I mentioned how downside we have a 176.67. So if we open at or below 179.32, we could ease back to 176.67 intraday. I have 177.60 as an intraday support level, and that is nothing more than Wednesday's low. It's an appropriate pivot point for the day because it's the low of the high so far. If we break it of the 2-week high, I might say. If we break 177.60, 176.67 is likely where we can place a daily low. If we close today below 176.67, 3 to 5 day swing trade shifts negative back into the 173 handle, where the 2 to 3 week position traders can have at it again, buying the 173.38 level, anticipation of bullish rotation back to the upper 180s within 2 to 3 weeks. If we close today above 179.32, or I should say higher on the day, no good reason to be short Apple over the 2 to 3 week time horizon, which is true above 173.73, or the 3 to 5 day swing trade. If we close higher on the day, I think 185.80 is likely by the end of next week. And over the next 2 full weeks, 188.93, where once again we can top out well into November trade perhaps, and is a significant upside continuation point through the rest of the year. Going back to the downside, if we close today below 176.67, no good reason to be long the market over the next 2 to 3 days, 3 to 5 days, until we actually happen to retest this 173.38 to 173.73 combination descending 1/3 speed line and channel top, where we could bottom out through next week, and above which 188.93 remains a 2 to 3 week upside objective. Now, if we were to close below 173.38 over the next 3 to 5 days, then we've got 167 down here. I call it as our next 3 to 5 day target. And that, once again, is our long-term support threshold on the weekly chart that is between 166.07 and 167.49, where we could bottom out through the rest of the year, possibly well into next. And in terms of the big picture, let's talk about the 2 to 3 month time horizon. Okay, there's no reason to be short Apple over the 2 to 3 month time horizon until we test 189.55. And then you can have at it, because we could fall off from here back into the upper 160s within a couple of months of doing so. The other 2 to 3 month being short scenario would be a settlement below 166.07 at the end of a week. Not going to happen this week, but if so, you can play the short side down to 131.82. Until then, there's no good reason to be short Apple under just about any time horizon. I can't really think of one right offhand, unless, of course, we open below 179.32, then you just might have at the 3 to 5 day time horizon, but you still want to see a settlement below 176.67 for that full momentum reversal over the short term. Until then, it really is all systems go to the upside, anticipating the upper 180s over the next several weeks, and once again, this 228.66 formation by this point next year or sooner. I don't think there's really anything else that needs to be said. I am going to leave you with this chart, the most appropriate for the day. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Friday's Apple, and you have a great day.